So, with regards to the new week on the markets of the crypto, right? What is what is it that we're looking at now? It's mid-July, right? Are we gonna have that big bounce? We're gonna have that big drop? We're gonna go sideways? Well, if you look at the actual volatility on the new weekly time frame, you'll see that actually Bitcoin's volatility is set to pretty much go a little bit sideways this week overall by the between the opening and the close of the week. Now that obviously doesn't mean that there can't be quite a significant amount of action to the upside and the downside uh, throughout the week, but the volatility so far, the lengths are showing, yeah, it's going to be relatively flat. Obviously, that doesn't mean up or down. It will most likely end a little, somewhat up or somewhat down. How much that somewhat is yet to be determined, and obviously on lower time frames, we'll see those changes happening, faster than on the weekly, and on the weekly, the weekly will be impacted by what happens on the lower time frames. So, right, there's that. And now, if we look, jump down to like the daily time frame, you see that the volatility is looking rather more up, right? Like the lengths of the volatility are looking fairly up, only the longer length is looking a bit down. So it is in fact possible that today we'll see price action head to the upside. And so far, the last I looked at the chart 20 minutes ago, that is exactly what we saw. We saw price action well to the upside from the beginning of the day. And it's like now in the 62K range, the high 62K range, which is not at all a surprise. And we've also seen the impact of that on the RMLRs. Yesterday's nice little move to the upside meant that today's third band up of the 1110 RMLR headed up instead of going down, as it would have if the price action had remained flat or not gone beyond where it was around halfway through the day yesterday. But there was that movement to the upside in the later part of the day, and that did in fact cause that third band to the upside to move up. And so today we could see that. Now the RMLR itself on the 1110 still remains as it was yesterday, or similar to it. But the third band obviously is more volatile, or more, it's further out and is more sensitive to movement. So even though the 1110 itself only moved a little bit, it did move a little, but the direction didn't change. But the third band, of course, is subject to change a lot more than the actual RMLR itself. So that is why we see that, and that should not surprise anybody who knows how to use the RMLR. And what it means is there is more space now to the upside before the price action actually hits that third band to the upside on the 1110 RMLR. And what does that mean? Well, that means that if the price goes, as up as it's gone already, possibly even a bit more, and remains sideways from there for a couple of days, even pulls back a little, even pumps back later in the week, and then pulls back a little later on, that would all fit very nicely within the daily time frames without hitting the 1110 RMLR's third band to the upside, which would mean that it would not cause a highly probable mean reversion at that point, right? It could continue to run. The alternative is that we could see the price action actually slam into that third band to the upside, and then whenever it stops hitting that third band, then it would be, or going beyond it, then it would be set up for a mean reversion to the 1110 RMLR, which would which if it happened quickly, could fake out a lot of people thinking, oh, it's going to dump heavy and that's it, it's over, right? Again, this whole season, this whole summer, well, in the northern hemisphere, right, this whole season has been about, since the all-time highs until now, I've been saying we're going to see more and more volatility that's taking out Bitcoin and other cryptos from the hands of people who don't actually have much or any, right, or very little left. And they're going to see that wealth transfer into the hands of people who have more and who know how to trade better. And we're seeing that, right? The so-called chop, right? It's driving regular traders crazy because they don't know what to do, right? When it goes up and down, up and down. There's actually a lot of volatility happening, right? Which is, if you're a volatility trader, that's what you want. That's great. If you're not a volatility trader, it will drive you crazy. If you're just a sort of fair weather trader and you're just looking for easy longs, for example, then this kind of sideways action will drive you nuts, right? Even if you're just holding and you're just expecting it to go up, this kind of sideways action will just drive you nuts, because you shouldn't expect assets to do anything other than what the VEPS tells you they're going to do. If you're just expecting based on hopium because your favorite YouTuber told you it's going to go this way or that way, you're just setting yourself up for pain and suffering. And you really shouldn't do that. You should avoid that kind of behavior. It's not helpful to anybody. So that said, if you want to learn how to do all this, like, let me just finally say, by the way, about the Bitcoin, like, don't be surprised, especially if you look at the lower time frames, to see the VEPS tell you, right, it's going to pump, it's going to dump, it's going to bounce right back, right? That could easily happen this week. You can see like a nice sine wave. Obviously, it's the VEPS, but not the sine wave, but you could easily see that happening. And so it would not be surprising to me at all to see the action basically do what it's done already so far, and then be followed by sideways or dump later today or later in the week. It could even keep pumping more before it dumps. But I wouldn't be surprised to see some kind of drop in the action, when it pull back from the high. That's always going to happen, especially on lower time frames, right? And then might bounce back. So if it does have a nice, good little move towards the upside, and then a drop down, and then a move back up, I would call that a normal day and a normal week, especially at this time when the volatility on the weekly is the way that it is, and the entropy is the way that it is, and everything's in a random move on the higher time frames, on the daily as well as on the weekly. It's in a random move. On a random walk, it means it's on a random walk. So that's why it's important to look at lower time frames if you want to find trending moves, and there are plenty of trending moves. Like on the 15-minute. In fact, it was on a trending move on the 4-hour. Last time I looked at it, around 3 in the morning, maybe 8 in the morning, whatever it was, 8 at night. I don't remember. It was when the new daily candle started. So U.S. Eastern Time would be 8 at night on Sunday night, and shortly after that, it was still in a trending move on the 4-hour, or just falling out of one. So could we see another trending move happen this week on the 4-hour? Maybe, but there's plenty more on like the 90-minute, the 45-minute, 33, 30, 15, 9, 6, 3, 1, whatever. Go through all the different time frames, and you'll see there's plenty of trending moves happening on lower time frames. Just as there are plenty, obviously, of random walks. It's just that on lower time frames, you have more occurrences of opportunity. And that's it. Hey, folks, how you doing? My day's all right. Hello, South Korea. Hello, I don't know how to pronounce your name. I'm just going to try to say, is it Aomide? Iomide? I don't know. Anyway, hello. Hope you're all doing well. Hope you all enjoyed a good weekend, despite all the crazy things happening in the world. And I hope you're all enjoying trading Bitcoin using the VEPs. If you don't know how, again, check out the link. I'll put the link in the bottom of the video description or in the video description. But if you want to just go to the Discord, it's alphatradinghq.com/discord. Again, that URL is alphatradinghq.com/discord. And you can enter for free. You can go into the request support channel and request free access to our volatility starter kit. We'll give you free access to our volatility starter indicators to help you learn how to trade volatility properly, and you can see for yourself how well it works. And yeah, it should be able to help you to essentially see the probabilities of the asset and what are the tendencies of the price action to go up, down, or sideways. Right? We give you a free chart for that to show you exactly how that works. We give you all the information you need, how-to tutorial videos, everything else. There's plenty of people in the live stream you can ask, how does this work? They'll be happy to talk to you. Plenty of information we share in the live streams, which are Monday through Friday. They start at 9 a.m. Eastern in the US, so a good half hour before market opens. And that means that you can ask the people in the live chat, in the live stream, questions that you want. If you have any charts you want to see specifically, any like assets you want to see charted or analyzed, we're happy to do that. And yeah, that's pretty much all I got to say about that right now. But again, I want to remind you about what's happening with the crypto market in general. What we're seeing right now is not at all surprising, right? Like, this is fully expected, and I've been telling you guys about this for months, before anybody else, obviously, and been telling you the VEPs were indicating that we were going to be doing this. We saw it very clearly months ago. We looked out on the weekly time frame, RMLRs, etc. We saw this happening, right? And I've been saying, look, doesn't matter what the news says. It matters what actually happens, the buy pressure and the sell pressure, right? And the buy pressure and the sell pressure were indicating that we were going to see a lot of sell pressure and a lot of buy pressure, making a lot of volatility and making a lot of traders go crazy. And it's a matter of, bearing out the time that it takes for a lot of these indicators to get to a certain point where they're going to make a significant next move, right? In the meantime, as I've been saying, this is actually the best area to be scalping on low time frames, right? Because it has relatively, quote unquote, tradable ranges, in that there's a cap on how far they go up and how far they go down. So it's been playing out those caps very nicely. And there's lots of days when it's, a few percent up or a few percent down, a few percent back up, a few percent back down. Sometimes it's more than a few percent. Either way, that's been good, right? Overall, the price hasn't even dropped more than, like, what was it? I think 22% or something like that, 25%. It's in Bitcoin land and in crypto land, that is practically nothing. Yes, we've seen 50% drops on some altcoins, even like on Solana, but that's to be expected, right? But you actually didn't see ETH 50% drop. And maybe that's because the people are, holding on to their Ethereum because they're expecting an Ethereum ETF, which is silly nonsense, because ETFs don't necessarily mean price go up immediately, right? It took some time for the Bitcoin ETF to see its prices go up right after they dumped when they were initially released. And remember, ETFs are not the underlying asset. They are derivatives. What does that mean? Well, that means that there's an infinite supply of them available, because anybody who prints them, anyone who's allowed to print them, can just print infinite amounts of the ETF, practically. There's no real cap on how many Bitcoins I can have in the ETF. They're fake. They're not real Bitcoins. They're pieces of paper that say if you cash, if you buy a Bitcoin's worth of the Bitcoin ETF, you have the right to claim a Bitcoin when you cash it out. Great, but if they sell 100 million of those whole Bitcoins, there's not 100 million Bitcoins people can cash out. So they'd have to be paid in cash or some other alternative currency, right? They couldn't all have a Bitcoin. So, I mean, yes, they can be paid out in the cash equivalent of a Bitcoin, but that's not a Bitcoin. And there's a reason that the markets love creating derivatives of assets that they believe will have a long-term trajectory to the upside and have a limited supply, meaning the only option really that they're going to give people is you're going to cash out in dollars, right? You're not going to get Bitcoin for it, like ever. Yes, you might have the dollar equivalent of that amount of Bitcoin, but it's not actually Bitcoin. So, and as the dollar continues to fall in purchasing power, that's good for the people selling you the derivative. It doesn't help them to have a strong dollar. It helps them to have the dollar keep falling over time. If it's temporarily strong or weak, doesn't matter. But over time, the purchasing power of the dollar continues to drop, and that's not good for the retail investor, but that's great for people selling stuff to retail investors. Just like a weaker dollar is good for exports from the United States to other countries. And a stronger dollar is good for imports to the United States from other countries. So it's all a matter of balancing. And again, what dictates the movements within the markets is the volatility, the entropy, the probability, and the statistics, which we coined the VEPS, because that's the acronym. I know, real rocket science there, right? But yeah, we call it the VEPS. And I invite you again to come and learn how to trade it. And, how to do it is really to learn with the free information we give you and understand the basic concepts. Like, first of all, trading is all about risk management more than anything else. If you have to pick a strategy, just go with solid risk management. That's your number one strategy. That's that's the important thing you need to do. And how do you do that? Well, you have to have a calculable edge. Well, we have a calculable edge. What else do you need to do? Well, you need to do three things as a trader. One, you need to take your profits early and often. Two, you need to limit your losses, meaning the moment a trade goes against you, you dump out of the trade, get out of the trade. And number three is don't trade emotionally, right? Don't be emotionally attached to your trades. If you're emotionally attached to your trades, you're more than probably going to lose most of your trades, right? If you are not emotionally attached to your trades, and you follow steps 1 and 2, take your profit and limit your loss, you are more than probably going to remain a profitable trader consistently, as long as you actually trade according to the tendencies of volatility. And again, we give out that information for free. What are the tendencies of volatility? There's only 6 of them you have to learn. That's not a lot, right? If you can learn 6 things, you can learn the 6 tendencies of volatility. And by the way, those 6 tendencies of volatility are also the 6 tendencies of entropy, in terms of random walks and trending moves and which direction price action is likely to go as a result of what the entropy is doing vis-a-vis the correlation. All right, so that's going to be it for now. I'll talk to you guys later. See ya.